I don't want to tell you in terms of ROI. You know very well if you calculate the ROI, you're going to jump from your seat without taking any directional bet, without any kind of stress of a gap up or a gap down, and a very easy adjustment with your theta decay, and your gamma risk remains controlled at all time. While doing option hedging, while doing option buying, you can get incredible results keeping your risk very small. Today, we want to bust a lot of myths of option sellers. We want to bust a myth that theta decay is an edge. I know that you come on this channel because you expect really high top quality always, and like always, I'm going to deliver. Number one, what makes a really good and solid strategy? These are the ingredients. Number one, there has to be low margin requirement. This is check. Number two, volatility, even if markets gap down by 2%, go up, should not be much of an issue. Point number three, like I said, volatility, upside, downside movement is no problem. Unlimited profit potential, wherein the loss becomes limited and obviously non-directional. I know you don't want to predict where market should go up or down. Let's learn all about it, right? So let's learn everything about this. So we are here on an Excel sheet right now. Okay. I'm just giving you a random example. Obviously, Nifty is a lot higher now, but just to put a round figure so that it's easy to understand. Suppose that Nifty currently it's trading 19,530. Okay. Now, step one is going to be we are going to long a straddle at the money, which comes out to be 19,500. Suppose the 19,500 call we are giving 200 premium, and 500 put we are giving premium of 180. So net long straddle, if you're doing the premium which is going out of the pocket is approximately 380 points. Very easy. This is our step number one. When you do something like this, it basically doesn't matter where market go up, down, or in circles. And you know very well, market moves very fast. Up, down, 2, 3, 4, 500 points is not much of an issue when it comes to market movement. So I hope the step number one is obviously it's pretty clear for you. Now let's move ahead now and let's see what happens. Now got to monitor the markets, use free trading alerts and trading view you get on the brokerage platform as well. What do you realize that after some time, market which was trading around 19,530 moved up. Eventually, market go up or down, move it up to approximately 19,800 now. So eventually what happens, obviously your call, which was trading at 200 has become 350, wherein 500 put has reduced its value significantly. So obviously if market go one side will gain, one side will lose, and at the money straddle has really high and maximum gamma. This strategy is not to be done on a weekly option, only on a monthly option, or higher is what is preferred. I'm going to tell you VIP points as well. I'm going to tell you adjustments as well. I'm going to tell you things which if I don't tell you, you will never know. So I'm going to tell you those things as well. Okay. Now market has moved up. Net what you see is that your call is making money. Your put obviously is losing money. So what do we do? The call which is making money, the side which is making money for us, we don't have to touch it. We have to hold on to that. Correct? Wherein the side which is losing money, so 180 become 50, this put we look forward to square off. We don't want this put to become zero. Market moved up, we square off. So now you're holding one call which is obviously in the money now. Now, what is the adjustment which one can do in this is that now we are making another position at the money, which is 19,800 long and 19,800 put long, right? So again, we are opening a new straddle. What is the name of the strategy? Staircase straddle. So what is a staircase? Staircase is one level and then another level is up and then another level is up. So what we are doing, we are moving along with the market, but we are creating a long straddle. Alongside, we are holding the call which is already in profits. If the thing is reverse, instead of up or down, we're going to do the same thing. Obviously, it makes no difference. So now the total cost is approximately 390 because there's going to be some disparity between call and the put, right? So that is how. Now we again wait. And after some time, what do we observe is that market went up to 20,100 now. So market went even more up. Okay. Now, obviously, the 19,800 call will be in profit. So we hold this, but the put has lost really high value because with every passing week the theta become more intense. So put is losing a lot of value, so 150 points are gone here, wherein the call we only made 100. It's a big significant difference. So what do we do now? We again do the same thing. We look forward to hold our 19,800 call. And now what do we do? Because market has moved up, it's a staircase straddle, a long straddle. We look forward to long at the money now. The at the money is 2,100. Naturally, what we're going to do, we are looking forward to open a new long straddle, which is at the money 20,100. Again, we are longing call and longing put. Remember very well that you're already holding the calls, two calls which is already in the money. Your first original call 19,500, then 19,800. So these two you're already holding. In addition to that, you are holding and making a new position now, right? So you are moving along with the market. You are taking advantage of volatility of the market and you are capturing the gamma incredibly well. One thing which you must notice before I move on any further and I explain you a lot more, that is that gamma risk get reduced when your option becomes in the money. Point number one. Point number two, your theta decay is extremely high on at the money, but when your option has intrinsic value, your theta decay is also no fear. Do we have any fear? We do not have. Beautiful. Now let's go ahead. Like I told you, this is the new position. And after the second time adjustment, which we did now, we are retaining 19,500, right? So this has become in the money. So this becomes 600 now. Obviously, pretty simple maths. You can do it. If market is 2,100, the 19,500 call is going to be 600 plus, of course. But I've taken lesser profit, right? So running profit is 400 because we bought it for 200, right? So and the put side, we booked the loss of 130, right? So we booked the put 130 loss, and second time we booked, as you can see my cursor here, we booked here at 150. So we got to also include that. And first time, as I can show you here very well, you see 130 we booked, right? So net losses so far we have booked is 130 and 150. But the calls which are original, which became in the money, they are making much bigger profit, of course, right? So net P&L so far in the trade, if we are moving along with the market, is become, suppose if you trade with just 150 quantity, then your profit becomes on a tune of 33,000. I don't want to tell you in terms of ROI. You know very well if you calculate the ROI, you're going to jump from your seat without taking any directional bet, without any kind of stress of a gap up or a gap down, and a very easy adjustment with your theta decay, and your gamma risk remains controlled at all time. And this adjustment which you're learning, I'm sure you can do it in lot of other strategies as well, because believe me, nobody talks about these kind of adjustment. You can watch the entire YouTube for 1-2 years, and then you come back in the comment and you tell me that anywhere it's discussed, because it takes a lot of years trading options day in and day out to come out with these concepts which really empower your trading. You got to like the video and let YouTube know that you're interested to learn things like that. Now let's do a profit analysis. Now you may wonder that what worse can go with this strategy at the moment. Okay, I'm going to talk to you more about this now. Market is already at 2,100, correct? And you just have made a straddle, a long straddle, 2,100. What worse can happen? You tell me now. The worst probably is that market will not move. Market will not move even 1 point. Correct? Tell me anything else which can go wrong. Market is, because if market move by 300-400 up, down, is not much of an issue. But if market stay where market is, then that's the worst situation. Correct. Okay, we've taken that into account. Suppose if that happens, in that situation, if you calculate the entire losses, the intrinsic value of the call, we realize that we're going to make around just 70 points of loss. You can calculate it for yourself and you're going to find this is the worst. But I ask you, isn't it a very highly unrealistic expectation that for the entire remaining 10-20 days, market will remain exactly at 1 point without moving? right? Even you know it, highly unlikely, very, very. But here, we believe in transparency. Want to tell you things, even if worse happen, it's not much to worry. Your risk is already extremely low because you're moving along with the market. And suppose if market from 2100 moves further to 2500, then your profit, it's going to be on a tune of 950 points. See how much of a difference between, and if you multiply by 150, suppose if you're trading with 150 quantity, this is really, really gonna blow your mind. But this strategy have some more explanation left, which I have to tell you. Knowledge is the only superpower which you need when it comes to option trading. Much better than other retail traders who are putting no effort in improving themselves, rather very happy in giving stop losses to the market, but not using that one stop loss to learn better trading techniques. Now I'm going to take you to VIP points when I'm going to explain you the 360 degrees about this. So let's learn even more now. VIP points number 1. This strategy have some limitations. Now, before I talk about limitations, there can be also one more scenario where market go up. And if market go down, then what do we have to do? In that situation, there's going to be a different adjustment than the one which you just learned right now. And you know very well that if I promise something, I definitely 100% deliver. So if you want to learn what if market go up and the market go down, do not worry. We have a solution for that. But there has to be a demand for people who want to learn. So every comment matter and your every like matters. If you want to learn, all you have to do is just simply ask. Very easy. But now, since we are covering directional move, let's understand the limitation. It requires management. So it requires a lot of management if market move up, because ultimately it's stair straddle. So you got to move along with the market. So this is for people who have active involvement in the market, who can do a lot of adjustments, and limited profit and low volatility. So if you take a position, this one, and market is just not moving anywhere, then this can be much of an issue for you because you want market to move very fast. So we have to do this strategy when you're expecting a really fast move. If you have already learned when to use such strategies, then you would know when to use it. Okay, because on YouTube, I obviously have limitations to, filter out the things which comes under the premium, obviously, right? Do not over adjust staircase straddle. So do not over adjust, and this also can be an issue in the beginning that you try to adjust every 100 points. Keep a set rule, maybe 200, maybe 300, maybe 500. Only then the adjustment needs to take place, not just every 50, 100 points. That's something which is very, very important. Okay, the idea is to not to overcomplicate things. Best gamma capturing strategy. There is absolutely no doubt. Gamma is with us. All we require is a couple of big, huge candles. Remember, the volatility, the VIX should not be really high because you don't want to get stuck in a high VIX situation. What to do if market go up and market go down? Like I told you, there are certain things. Probably I want to give you a hint that we remain on the buying side only. Wherever market moves, the idea is to get your at least one of the legs of a straddle into profit and capture the intrinsic value of that. Market moving up, going down is also not much of an issue. We can do that very well. That's why I say hit and trial way of trading one must completely avoid. You can elevate your game, you can learn the craft in record time, obviously, which requires less monitoring. Premium strategies are perfect for low stress trading. Your concepts of option trading, your method of option trading should be of top notch. And then you focus on execution flawlessly. And after that, the result is just a byproduct of doing the right things at the right time, and results of making money or profit booking is just a byproduct. Take your trading to such level where you never have to worry about booking profits from the market. That's the name of the game. All right, guys, so I'm sure you must have enjoyed a lot. If you want to learn part 2, then do comment. And as always, I will honor your request if people request a lot in the comment section. All right, thanks for watching the video. I wish you all the very best. And like I always say, you are going to do so well in trading. You will surprise everyone. I wish you all the best. Bye.